There's a lot of people talking about MicroStrategy as going to blow up because they've used so much leverage to buy his 650,000 Bitcoin, and they've kept leveraging every chance that they could, borrowing in fiat to buy crypto.
Yeah.
The problem is when the price of the share price falls below a certain point, there's going to be a call, and they're not going to be able to meet that call unless they start selling Bitcoin.
Firstly, it's Bitcoin, not crypto. And there's a massive difference there, because if you were trading your cash in your balance sheet for something that can literally be printed out of thin air, just like your cash can be, for another version of that doesn't make any sense. But they're trading it for something that's finite. There can only ever be 21 million Bitcoin. And Strategy owns, I think, just over 670,000 Bitcoin. They bought 10,000 last week, sorry. And that whole strategy, it really is a leverage play. It's an amplified trade, because what you're doing is you're buying shares in a publicly listed company who has figured out the wiring to effectively tap into traditional capital markets, to take that capital out and convert it into digital finiteness that they hold on their balance sheet. And so now you're investing in a company that has some operational activity. Yeah, it's a data analytics company, software company. But now their profit, which sits on their balance sheet, if there is cash that sits on their balance sheet, is traded for Bitcoin. And so where you get this extra volatility happening is where the Bitcoin price runs up. Their valuation becomes more, which allows them to hit the money feature or issue more preferred shares to extract more capital in to convert it to more Bitcoin. So it creates this flywheel thing. Unfortunately, it goes the other way. And even just fear of them being excluded from an index, or fear of the price of Bitcoin falling, will have an outsized impact on the sentiment for strategy shares. And I think that's why we've seen such volatility.